Attention black folks who don't have enough saved for retirement. I'm going to give you some information today. I know it's going to blow your mind because every time I teach this strategy in my weekly workshop, the most common thing that I receive, the most common piece of feedback I receive from attendees is, oh my goodness, I had no idea that a life insurance policy or an insurance policy could do that. What I'm going to do today is I'm going to show those of you who don't have a lot of money saved for retirement. Maybe you started late. Maybe you just haven't saved enough based on some of the other life things that come up. You're helping your adult children. Maybe you got a divorce later. Maybe you had kids later. There's a host of reasons why we as a community don't tend to have a lot of money saved for retirement. Maybe you are working for an employer that does not offer a retirement benefit, or maybe the employer does not match your retirement benefit, or maybe you have some money saved but you just have no idea if it's invested in the proper vehicle. Maybe you are not keen on having all your money in the stock market and you're asking yourself, I know there has to be something else better I could do with this money other than just leave it in this Fidelity IRA or leave it in the old 401k at my old job. I'm going to teach you what is called a private pension strategy. Some people call it an annuity. Some people might call it an index account. What it is a insurance policy that is what's called an investment grade insurance policy that we're using for the purposes of the guarantees that we receive on both the growth and the income. Now, this is very important for those of you who do not have a lot saved. You're starting later, because if you look at what you have saved right now in most cases and you say to yourself, I'm going to put 50% of my income aside for retirement planning. In most cases, even if you save 50% of your income from now until the next 10 years or 15 years passes, most of you still would not have enough saved. So what are we going to be able to do with an insurance policy that can help us close that gap guaranteed? Now, you can absolutely invest in the stock market. In fact, I think stock market investing is fantastic if you are properly allocated depending on your age. But what you have to think about as a black retiree, especially because you don't have as much saved as your white counterparts, even if you work in the same industry, you make the same, you got all of the same experience, you still don't have as much saved, because black people are not paid the same as their white counterparts. So how can we use insurance in a way to help us multiply our money so that we can get that guaranteed growth on our money and have the guaranteed lifetime income? That way we can take $100,000 or $200,000 that we have in that Fidelity IRA or that Vanguard IRA or that Charles Schwab IRA or in that TSP that we left in the federal government because we just had no idea what we could do with that money to help us close that retirement gap. Those of you who are teachers in school systems, some of you don't even have Social Security to rely on. How are you going to build another source of income that's going to replace your Social Security? I'm going to show you all how this private pension strategy, which makes use of an insurance policy, can get us where we want to go without having to invest in the stock market, where we've actually helped black folks, couples, individuals take 50, 100,000, 200,000 and turn that money into $4, $5, and $600,000 of future retirement income. So without further ado, let me jump in and show you how this strategy works, where we're using, again, our old retirement money in TSPs, IRAs, Roth IRAs. We're multiplying that money into an insurance policy, and then we're using that money to support us in retirement, and we have long-term care included at no additional cost. So this is how we're going to take a $30,000 investment and turn it into $200,000 or $300,000. 47-year-old client invests $30,000 into this policy. Checkbox number 1, index annuities offer you bonuses. So you notice in the protected income column, the first year account value is $41,538. So that is because when we invest into this policy, I believe at the time that we ran this example, the insurance company was paying a 30% bonus. So once you add in the 30% bonus plus the first year interest that this client would earn on this account, that first year account value is $41,538. Now, this client is 47 years old, as we can see. So we don't need this money until later in life. Look what happens if we leave the money in this policy, allow that money to grow. We don't take any money out of the policy. We don't add any money to the policy. This could, for example, be your IRA that you have at Fidelity. You open an IRA with the life insurance company. You roll that money into the life insurance company IRA, and you invest that IRA into one of these policy setups. Now, in this example, that $30,000 investment, if we left it in the policy, didn't touch it, didn't take any money out of it, didn't add any money to it, when we get to 65, the income account is going to be worth $221,000. And remember, this is risk-free, zero stock market risk. This is risk-free growth from $30,000 to $221,000. And second thing, we have a guarantee on our income. So when we look over in the income distribution column, that $221,000 investment is going to pay us $12,786 per year. And number three, that is going to be for the rest of our life. So imagine taking a $30,000 investment right now as a 45, 46, 47-year-old and being able to turn a $30,000 one-time investment into a $12,000 or $13,000 every year income. Now you all see what I was talking about when I was saying this is a game changer, because you can use this policy even with a small amount of money. A lot of my 40-something-year-old, 50-year-olds, they don't have a lot of money saved, but guess what? If you make use of this strategy, you can take $30,000 and turn it into $300,000 or $400,000. And watch this. We've grown the account from $30,000 to $221,000. And look at this. Now we start to take income out. Look how much income we can take out of this policy. $237,000 of income. So you basically turn a $30,000 one-time investment into $237,000 of income. And watch this. This is just the beginning, because if this client lives another 20 or 30 or 40 years, guess what? The life insurance company is still going to continue to send that check every single year like clockwork. Another thing you're going to notice is this income is not fixed. It is an increase in income, which means what? We have inflation protection already built into this account. So as things get more expensive, we don't have to worry about our money being short. We will have that inflation protection already built in. Second example, we have another client, 51-year-old client, investing $200,000 into their annuity contract. Again, remember, we get those bonuses. This client got a 25% bonus on their deposit, so the $200,000 turns into $250,000. And look what happens to that $250,000 investment. This is a 51-year-old client. If she leaves the money in the annuity contract, doesn't touch the money, when she gets to 65 years old, this income account is going to be worth $1.7 million. Zero stock market risk, 100% principal protection. We cannot lose money. And watch this. That $1.7 million income account is going to pay us $91,000 a year. Imagine now y'all need to let me slow down. Somebody needs to see this, because you are on here. Some people come to my workshop, never even heard of this, never even knew that an insurance policy could do the stuff I'm showing you today. But watch this. Taking a $200,000 investment, and you don't have a pension. Not everybody works for the federal government. Some of you work, you're teachers. Maybe your school system doesn't pay into Social Security. So guess what? Your only source of income is going to be what? Your pension that you're receiving from your school system. But guess what? If we got some money in a CD, we got some money in an old retirement account, you can do just like this 51-year-old client of mine, put $200,000 in the policy, have a $50,000 bonus added to the account, and when you get to 65, you'll have $91,000
per year of income paid out to you for the rest of your life, and the $91,000 is just your first year income. If this client has longevity in her family, she's going to be able to take her $200,000 investment, and by the time she reaches 80 years old, she's going to end up taking out $4.5 million of income. Again, we're turning a $200,000 one-time investment into $4.5 million of lifetime income. We basically 20 times this person's retirement. Again, this is because of the fact that we have guarantees. We get that guaranteed 20-25% bonus. You got $100,000 and you put it somewhere and you getting a 30% bonus. Absolutely, that's going to help that money grow quicker. And again, if you are behind, this is a game changer because we can take a small amount of money, position it strategically into one of these policies, and turn it into a significant retirement income. And then the last example is from a client I'm working with right now who just recently retired from FedEx. $165,000 we're rolling over from a pension. Now, this is also for some of you who have pensions. Some of you have portable pensions where you can actually take money out of the pension, right? You can take money out of the pension, maybe move it into an IRA account, or you can leave it in the pension. I'm going to tell you to move that money out of that pension, because by moving that money out of the pension, if you can get a lump sum distribution from that pension of $165,000, you can put it right here into this annuity contract, get a 20, 25, 30% bonus. And look at what's going to happen with this client. $165,000 deposit turns into $222,000 day one value because of the bonus that we get. And when this client gets to the age of 60, we ran it until 67 because he's already 59 now, he's going to be able to take $18,000 per year out of the policy. That's his first year income, and he's going to get that income for the rest of his life. If he lives to the age of 77 years old, that's $414,000 of guaranteed income. We only invested $165,000. So we turned $165,000 one-time deposit into $414,000 of total lifetime distributions that we are able to take out of this policy. And let's not forget the two other benefits. You have inflation protection and long-term care included at no additional cost. Now, what does that mean? Long-term care included at no additional cost. That means that these income figures that you see here of $18,000, $19,000, $29,000, these are annual income figures that this client is able to take out of his policy. He's just 59 years old, so we're talking just 8 years from now, he's going to be able to draw off his policy. And watch this, if he has long-term care issues that come up, heart attack, stroke, cancer, God forbid to mention Alzheimer's, a host of any other things that might come up in retirement. As we know, things do come up as we get older. This policy will give him long-term care payments in addition to his income that he's already pulling out. They will double the income, so he'll get another $18,000 in the first year, another $19,000 in the second year, another $20,000. And a lot of companies will pay you this benefit for 4 or 5 years. So think about what that does. That means now I have long-term care bundled into my retirement, and that's one less thing that I have to worry about. And we know as a community, these are things, long-term care, inflation, that stuff hits us a lot harder because we don't have enough to begin with. But what we can do is we can take full advantage of the living benefits of life insurance, being able to leverage this policy with current retirement savings into 3, 4, 5 times of what we put in. Now this becomes a significant portion of money that we could use to support ourselves in retirement, to give us that financial security and financial freedom that we're going to need later on.
All right, everybody, so there you have it. I've just shown you how an annuity can be used to multiply your money, to create the guaranteed lifetime income that you cannot live, to give you the long-term care protection, to give you the bonuses, to give you the inflation increases that you're going to need. This again is how we're going to be able to use an annuity to create not only financial security but financial freedom in retirement. So what I'm going to do now is invite you all to register for the annuity and retirement planning workshop. In that workshop, I'm going to go into a lot more detail than I can go in right now. Click somewhere around this video to register. Also, if you are interested in a consultation, maybe you don't have time time to attend the workshop. You know this is a strategy that makes sense for you based on where you are right now. So if you're in your 50s right now, you don't have a lot of money saved, this is a game changer. If you're a teacher, you don't have money saved, you don't have a lot of money saved, the only money you're going to have is your pension, which 9 times out of 10 is not going to be enough. Or if you're retired from the military, you may be getting your military pension, that may not be enough. It just depends on your family situation. So what we're doing is we're using the insurance policy to strategically create another source of income that can support us in retirement. And because of how the annuity contract is structured, we're able to decide when we want to take our income out of that policy. And by having that choice, we're also able to better control our income tax liability. Because remember, when you get ready to retire, the taxes are still going to have to be paid on that IRA distribution, or on that TSP distribution, or on that pension distribution. So by using the annuity within our retirement income plan, we're not able to start taking money out of the annuity maybe at 60, take that money out from 60 to 67, allow our Social Security income benefit to increase to the full retirement benefit, and then we're able to receive more income in retirement and pay less in taxes. Why? Because we've been able to plug the insurance policy into our retirement income plan successfully in a way that provides us the best long-term benefit. If you all are interested, make sure you register to attend the upcoming Annuity and Retirement Income Planning Workshop. This is going to provide you a ton of information on income taxes, on how we're going to use insurance to help us secure our retirement and fund our retirement, and also provide coverage for some of the other things such as long-term care and inflation that we know are going to come up as we get older, okay? Now, again, make sure you register. There should be a link somewhere around this video for you to register for the upcoming Annuity and Retirement Income Planning Workshop. If you are interested in scheduling a consultation, also click somewhere around this video on the appointment link, or you can go to blackwealthcompany.com, go to the appointment section of the website, schedule your free no obligation consultation. We are located in Atlanta. We do both virtual and in-person appointments. So if you're in the Atlanta area, would like to come in for your appointment, we're located at 1055 Howell Mill Road in West Midtown. Okay, again, thank you all for watching this video. Make sure you also subscribe to our channel, Black Wealth TV. We're going to be opening the minds of Black folks, not only here in the United States, but also in Nigeria. I travel to Nigeria 4 times a year, so you're going to be seeing a lot of conversations that I'm having with our brothers and sisters in the motherland about building wealth, about things that are going to make us stronger as a people. Again, make sure you register. Also, schedule your appointment using the link around this video. This is Jerry Gordon, founder and CEO of the Black Wealth Company, where Black Wealth is our business.
Freedom, freedom with Jerry.